Friday the 27th of October 2017, 1626 WASHINGTON Alliance News. The U.S. economy grew at an annualized pace of 3% in the third quarter despite major hurricane damage in Texas and Florida, according to the Commerce Department's initial estimate on Friday. The rate was little changed from the 3.1% annual growth rate of gross domestic product in the second quarter. GDP grew by 1.2% in the first quarter. Household consumption, business inventory, commercial construction and federal government spending contributed to growth during the July-September period, as well as a rise in exports and a decline in imports, the Federal Bureau of Economic Analysis said. After the immediate disruption of local economic activity due to Hurricanes Harvey in late August in Texas and Irma last month in Florida, reconstruction in the Gulf states is already underway. A consumption-based measure of inflation included in the GDP report showed a small increase in prices to an annualized pace of 1.3%, still well below the Federal Reserve's longer-term target of 2%. The Fed, which prefers the consumption data as an inflation gauge over the more widely followed, survey-based Consumer Price Index, has raised its benchmark interest rate in the last 2 years from near zero to just over 1%. The central bank this month began reducing its record-setting $4.5 trillion bond holdings, most of which was piled up as the Fed pumped money into the markets for years to spur investment in the wake of the 2008 financial crisis. The U.S. economy grew by 1.6% last year, the weakest calendar year performance since 2011. The Commerce Department is due to issue a revised third-quarter GDP estimate on November 29. Copyright DPA.